To remain updated with the latest business news, click on the bell icon.
Tech companies will kick off the December quarter earnings season next week with TCS, Infosys, HCL Tech and Wipro releasing their numbers. Healthy deal flows are likely to drive revenue growth. Experts believe that mid-cap IT companies are likely to continue to outperform large-cap firms, and some brokerages expect upward revision in guidance for growth for the IT sector's major companies. Let's head across to our researcher Sakshi Batra for more details.
Well, that's right, Abha. The IT sector remains in spotlight due to the increased digitization and the work-from-home culture in COVID-19, and is likely to report a very strong performance in the December quarter earnings, especially when we talk about the large IT companies per se on the back of the increased deal pipeline as well. And that is despite the higher attrition levels that we've been seeing in this October to December period, and also the increased pay hikes and also the lower working days that we've been seeing. Brokerage houses are also expecting an upward revision of the growth guidance from these big wigs like TCS, Infosys, HCL Tech and also Wipro. And that actually comes in from the fact that Accenture had set the tone for the Indian IT companies in the last week of December by also improving and upgrading its sales guidance and also the EPS guidance as well. Now, apart from that, the large cap IT companies are likely to report a revenue growth in the constant currency terms of about in the range of 3 to 5% Now, when we talk about the margin expansion as well, that is also expected to be in the range of 50 to 180 basis points per se. And that is despite any kind of impact that we've been seeing due to the increased cost of, say, hiring, furloughs and the lower working days in this December or the year-end period as well.
Sakshi, thanks so much for that. Let's go across to Gaurang Shah of Q3 Financial Services for a look at what to expect from some of those IT earnings. What's in store? Gaurang, take us through, given that we've seen consistent outperformance by the IT majors, what really is in store this earnings season?
So very strong verbatim as far as the management, post-management press conference for more so for the second quarter. First quarter of this financial year was strong expectation of return to normalcy. Second quarter surprised all of us with the kind of big ticket clients and the constant currency attrition rate coming down, employee per cost being in a very controlled manner. And more importantly, I think service industry is something that adjusts to this new normal, which we all are living into sooner rather than later. And if I have to go by the commentary of the second quarter, most of the frontline and mid-cap IT companies, they are expecting a better than expected quarter for the third quarter this financial year. Fourth quarter could be even better, given the opportunity that lies not only in the global markets, but also in the domestic markets. I think they've got a great opportunity. And we at Geojit believe that IT could be one of the star performers, at least for the next 2 or 3 or 4 quarters.
Gaurang, thank you so much for joining us and giving us a quick peek into really what to expect as earnings season gets ready to kick off.
If you like the video, do like, comment, share and subscribe.